Amazon recently turned in a first-quarter earnings report that easily topped analyst estimates and was widely applauded by analysts. Amazon has been crushing the market for 24 years now. $10,000 invested in Amazon on the first day of trading in May 1997 would be worth $16.6 million at today's share prices. This review of Amazon stock will show comparisons of key metrics to watch, and a summary of the company's most important issues to help investors make better decisions. Multiple analysts raised their price target on Amazon stock after the earnings report, ranging from a high of $4,500 down to $4,125. The company reported first-quarter earnings of $15.79 a share, racing past views for $9.54 a share and up 215% from the year-ago period. Revenue jumped 44% to $108.5 billion, also beating estimates. What makes Amazon special? Amazon's online retail operations collected $340 billion of top-line sales last year, nipping at the heels of mighty Walmart and its $559 billion revenue reading. The Amazon Web Services, AWS, cloud computing division saw $45 billion of net sales, generating more than half of Amazon's operating profits. Amazon is the third largest publicly traded company in the world, behind tech giants Apple Inc. and Microsoft Corp. But unlike those other two companies that have fairly defined flavors, Amazon isn't as easily categorized. It began as Earth's biggest bookstore, according to an early slogan, before becoming a store for everything, and more recently, a cloud computing leader, thanks to its Amazon Web Services division. Amazon entered 2021 with plenty of big growth opportunities, including plans to expand its virtual healthcare program across the US. It is also expanding its prescription drug business. If Amazon can deliver more efficient healthcare services, the potential is enormous for fueling its growth engine, and by extension Amazon stock. Healthcare now comprises nearly a fifth of the US economy. In a nutshell, Amazon won't run out of high-growth business ideas anytime soon. If it managed to do so, the company would just turn its massive infrastructure and massive business ambitions onto some other sector. Rumor has it that Amazon Prime will start competing directly with the likes of UPS and FedEx later this year, carrying packages for other companies and maybe even handling consumer-to-consumer shipments. Beyond profits and sales, many investors are interested in cash flow generation metrics. In a nutshell, this figure is a sign of how much cash a company is generating after paying the costs of doing business. And based on the specific nature of big tech stocks from Amazon to Apple, free cash flow can vary significantly. The good news for Amazon investors is that while sometimes profits can be thin, there is a ton of cash moving around. As a result, it has the second highest free cash flow per share among its peers over the past 12 months. Technical analysis of Amazon stock. The IBD stock checkup tool shows that Amazon stock has an IBD composite rating of 71. The rating means Amazon stock currently outperforms 71% of all stocks in terms of the most important fundamental and technical stock picking criteria. But its relative strength rating is a weak 37. The rating tracks market leadership by showing how a stock's price movement over the last 52 weeks measures up against that of other stocks. Ideally, look for stocks with a rating of 80 or higher. Amazon's relative strength line continues to slide sideways. A stock's relative strength line compares the stock's daily price performance to the S&P 500. An upward sloping RS line means the stock is outperforming the S&P 500. A downward sloping means the stock is lagging the S&P 500. Final thoughts. It's not too late to start an Amazon position today or add to your existing holdings. The stock may not skyrocket from this $1.6 trillion market cap, but Amazon's market-beating habits are hard to break. Don't base your to buy or not to buy decision on a stock's past performance or current price. Instead, rely on the all-important step of scrutinizing Amazon's merits as an investment. That includes digging into the company's management, revenue, net income, and earnings, as well as analyzing the competition. Aside from those factors, you'll want to consider whether buying Amazon stock is the right decision for your portfolio. The answer depends on your financial situation, current holdings, and investment goals. If you have any further questions, then make sure you leave a comment below. If you'd like more daily finance content, then make sure you hit that subscribe button to join our community of aspiring entrepreneurs and investors.